Welcome to our deep dive into the world of banking, where we uncover the secrets that banks would rather keep hidden from you. In this video, we'll explore the practices, policies, and strategies banks use to maximize their profits, often at the expense of their customers. From hidden fees to complex financial products, we'll break down what you need to know to protect your money and make informed decisions. Let's start by understanding why banks operate the way they do and what motivates their actions. Banks are businesses, and like any business, their primary goal is to generate profit. This profit motive drives many of their decisions, from the products they offer to the fees they charge. While banks provide essential services, their focus on profitability can sometimes lead to practices that aren't always in the best interest of customers. Understanding this motive helps explain why banks may push certain products or policies, and why transparency isn't always their top priority. One of the most common ways banks earn extra income is through hidden fees. These fees can be buried in the fine print of account agreements or disguised as routine charges. Overdraft fees, maintenance fees, ATM fees, and transaction fees are just a few examples. Many customers are unaware of these costs until they appear on their statements. By understanding where these fees come from and how to avoid them, you can save a significant amount of money each year. Banks often offer complex financial products that can be difficult for the average customer to understand. These include adjustable rate mortgages, bundled investment accounts, and credit products with variable terms. The complexity can make it challenging to compare options or fully grasp the risks involved. Banks may not always provide clear explanations, leaving customers vulnerable to making costly mistakes. It's important to ask questions and seek independent advice before committing to any financial product. Credit cards are a major source of revenue for banks, but they can also be a trap for consumers. High interest rates, late payment penalties, and confusing reward structures are common. Banks may encourage customers to spend more or carry balances, leading to mounting debt. Understanding the terms of your credit card agreement and paying off balances in full can help you avoid these pitfalls and keep your finances healthy. You take out a loan, banks often include terms and conditions that can be difficult to decipher. Prepayment penalties, variable interest rates, and hidden charges can increase the cost of borrowing. Banks may not highlight these terms up front, making it essential to read the fine print and ask for clarification. Knowing what to look for can help you avoid unexpected expenses and make smarter borrowing decisions. Banks have the power to set and adjust interest rates on savings accounts, loans, and credit cards. These rates can change based on market conditions, but sometimes banks adjust them to maximize their own profits. Customers may find their rates suddenly increase or decrease without clear explanation. Understanding how interest rates work and monitoring changes can help you make better financial choices. Banks collect vast amounts of data about their customers, from spending habits to credit histories. This data is used to tailor products, target marketing, and assess risk. While this can lead to personalized offers, it also raises concerns about privacy and how your information is used. Banks may not always disclose the full extent of their data practices, so it's important to review privacy policies and understand your rights. Banks use sophisticated marketing tactics to attract and retain customers. These include special promotions, loyalty programs, and targeted advertising. While these offers can seem appealing, they often come with strings attached, such as minimum balance requirements or limited time benefits. It's important to read the terms and understand what you're signing up for before accepting any promotional offer. Banks are experts at managing risk, but they often shift some of that risk onto their customers. For example, banks may require collateral for loans or impose strict terms to protect themselves. Understanding how banks manage risk can help you negotiate better terms and avoid unnecessary exposure. Always ask about risk factors and what protections are in place for your accounts. Fine print in bank agreements often contains important details that can affect your finances. Banks may use legal language and complex terms to obscure fees, penalties, and restrictions. It's crucial to read all documents carefully and ask for clarification when needed. Don't assume that all terms are straightforward. Hidden clauses can lead to costly surprises. Banks can close accounts for a variety of reasons, sometimes without much warning. This can happen if you violate terms, fail to maintain minimum balances, or if the bank suspects suspicious activity. Account closures can disrupt your finances and make it difficult to access funds. Understanding your rights and the bank's policies can help you avoid unexpected closures. Customer service is a critical aspect of banking, but it's not always as helpful as you might expect. Banks may use automated systems or limit access to real representatives. Resolving issues can be time-consuming and frustrating. Knowing how to navigate customer service channels and escalate complaints can help you get the support you need. Banks operate within a framework of regulations, but they often find ways to exploit loopholes. This can include creative accounting, offshore accounts, or structuring products to avoid oversight. These practices can put customers at risk and make it harder to hold banks accountable. Staying informed about regulatory changes and understanding how banks respond can help you protect your interests. Banks offer investment products like mutual funds, certificates of deposit, and retirement accounts. While these can be beneficial, they also carry risks that aren't always fully disclosed. Banks may emphasize potential returns while downplaying risks. It's important to research investment options, understand the risks, and seek independent advice before investing your money. Savings accounts are often marketed as safe and reliable, but they can have limitations. Banks may impose withdrawal limits, low interest rates, or minimum balance requirements. These restrictions can reduce your flexibility and earning potential. Understanding the terms of your savings account can help you maximize your benefits and avoid unnecessary fees. Banks invest heavily in security to protect your money, but breaches and frauds still occur. Cybersecurity threats, identity theft, and unauthorized transactions are real risks. Banks may not always disclose security incidents promptly. Staying vigilant, monitoring your accounts, and using strong passwords can help safeguard your finances. Banks operate globally, and practices can vary widely between countries. Some banks may offer better protections or more transparent policies, while others may be less regulated. Understanding how global banking works can help you make informed choices, especially if you travel or do business internationally. Digital banking has revolutionized the industry, offering convenience and accessibility. However, it also introduces new risks such as online fraud and data breaches. Banks may not always provide clear guidance on how to protect yourself online. Staying informed about digital security and using safe practices can help you enjoy the benefits of digital banking without falling victim to scams. Many customers don't realize they can negotiate with banks. Whether it's for lower fees, better interest rates, or improved terms, banks may be willing to make concessions to retain your business. Being informed and assertive can help you get the best deal possible. Don't hesitate to ask for what you want and compare offers from different banks. Banks play a vital role in our financial lives, but it's important to be aware of their practices and motivations. By understanding what banks don't want you to know, you can make smarter decisions, avoid costly mistakes, and protect your money. Stay informed, ask questions, and always read the fine print. Knowledge is your best defense against hidden risks and surprises in the banking world.